Even when you feel low, you can still go. Even when you feel slow, you can still go. Even when there's no hope, you can still go. I never answer to no, man, I still go. Go, 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 yo, go, go.
All right, traders, this is Revan Wood. I go by SageFT online. I am the founder and creator of the live trading desk at SageFT.com. This is going to be the Sunday night review and Rev-Up for April 13, 2025. Let's get right into this. All right, it was a record-breaking week in terms of range. Trade war fires off. There was a lot of very large moving bars, if we will, here. And a lot of people that were unfamiliar with how an expansion of range works truly got humbled this week. All right, that in terms of traders. When your ATR expands, and let me show you how this works. When your ATR expands, what you're going to notice is the bid and offer size on your depth of market are going to go down. That's called money management. The algorithms do it automatically. You have to adjust. So if you're used to trading a 40-point range with one mini in your $50,000 eval account, that became extremely difficult to do as this range increased. We got above the 100s, the 120s. You should be down in the micros. We got into the 600-point range. Now, this is capitulation. Okay. Now, I don't mean, let me bring it back. Watch this. Everyone thinks capitulation, we're going to go back to all-time highs. Well, we could, right? Okay. But when you see ranges like this, that's capitulation for something else is going to happen. All right. Now, you can go back. Now, we've never had history has never had anything like this, right? So you can't just go back and look at it. But what you can do is you could say, well, let's look at the last time the market went down. Okay, here's 2008. Look at this. The first thing that happens, the ranges expand. See, look, they got a higher high here before they went into destruction territory. Okay, ranges expand up and down, and then up. Right now, watch. Look at this huge one. This is massive. Just so you guys understand how big this is. Okay, that is from 1790 to 1830. Right, that's 40 points. Back then, that was absolutely massive. This is a daily candle. All right, so now watch. See how it keeps expanding, expand. It's expanded. These moves were huge. I remember them. Oh my goodness, we're down 40 points. Oh my goodness, we're down 50 points. That 50 points down was a massive slaughter. So that's when you could use one mini, right? But so if 50 points is big, what do we think 640 points is? We didn't go tenfold. Think about it. We were at 1,800. We're only at 50 at 5,000. So we only, okay, we're going to go 3,600, 5,400. We only 2x'd. So that would be a 150-point range if we were to do apples to apples. Okay, this is a 640-point bar. You should, if you have a $50,000 eval account, you should have one micro, max 2 micros, okay? Because you have to think about how it works, right? If you are stressed about the leverage on a 40-point day, what's a 640-point day doing? Now, you're probably thinking, yeah, but you can make a lot of money. Yeah, but you can get stopped out 30 times before you make that money. Therefore, it's going to be a net wash, okay? So these are the kind of things that we needed to think about. So let's go in, and here's what we were looking at. This was incredible. Gap down, pop, drop, and then what we were watching was this over under here as we went through Wednesday, I believe it was, came back. Now, here's where we're just going to move right into, well, what do we do moving forward? Perfect. What we do moving forward is we watch this level here, okay, which is 05, 53.05. Now, where do I think we go? Here's look at this. This inefficiency is going to spook you. Watch this. 55.64 to 55.66. Yes, 6 ticks of inefficiency is where I think we go on the daily chart. Okay, I really do. I really think there is going to be some sort of news that they're going to come up with. Okay, now here's what we have to think about. What if that news fails? it's straight back down to these lines that you see here. There's a fair value gap that is still alive. Okay. So now, what they're going to try to do is they're going to try to say, okay, we filled this inefficiency. Now we need to go to the next one. Okay. But what if they find an inefficiency that's below there instead? Remember, the market trades from pockets of liquidity to pocket of liquidity. We're here. Well, what they know is there's going to be some liquidity above here, or some attempt at some liquidity. Okay. They also know that if they start testing lower lows, there's going to be some liquidity down there that they can plunder. All right, that's going to do it for me. We will see everyone tomorrow morning, 8 a.m. live on all of our social medias. Now, going to be just a slight change. Less dog and pony show, more reading tape. That's going to do it for me. I'm Reverend Wood. I'll see you tomorrow morning. Good night.